Welcome then to our second topic within fraudulent behaviour, the one of money laundering. A serious criminal offence. So the first thing to tell your examiner is what is the legislation. And it's the Proceeds of Crime Act 2002 as amended. Well, so what is money laundering? Well, I'm sure we all have a general idea. It's by which the proceeds of crime, dirty money, is washed clean, so it appears to come not from crime. That's what we're talking about. The examiner, though, comments on students' answers that they are really rather vague about what is money laundering, and we need to be, in fact, much more precise. So let's see exactly what the Proceeds of Crime Act says. Well, it says that money laundering is the process by which proceeds of crime, any crime, not just robbing a bank, but things that you might get involved in as a professional accountant. What if your client, say, is doing a VAT fraud or something like that? So it's any crime. Proceeds. Could be money. Doesn't have to be money. It could be other property. Diamond necklace stolen in a burglary, for example. Are converted into assets which appear to have a legitimate rather than an illegal origin. And of course the whole aim of the process is to allow the holder to enjoy those proceeds free from suspicion as to where he got them from. As we said earlier, it's washing dirty money clean, or dirty property clean. Now, the process normally has 3 stages. Not always, but normally. And we need to look at them. The first one, it's called placement. This is the initial disposal of the proceeds of your criminal activity. For example, buying a business. You're placing the proceeds into a business. Or you're buying shares, or you're buying gambling chips. This is, if you like, putting the money into the washing machine. The next one is layering. This is moving the money from place to place or from business to business. So perhaps you sell the first business you bought another one. Or you sell the first house that you bought with the proceeds of crime, buy another one or put it through a business. And you probably shuffle it around the world through various banks in, say, Liechtenstein, the Canary Islands, which don't have very disclosable sources. It's all to try and disguise more and more so that the authorities don't catch up with you. Essentially, in simple terms, this is putting the money back in the washing machine, washing it again as many times as possible, and probably in different washing machines too. Then the final step, integration. And this is the outcome of the previous processes. The money or whatever now looks clean. So this is when you take it out of the washing machine, hang it up to dry. So that's the normal 3 processes. Well, what more precisely are the offences? 3 in total, 3 categories. Firstly, let's look at the laundering offence itself. And I'm going to be picking out, highlighting for you here, the key words, because they're quite complicated. You don't want to remember the whole lot. Well, the first category, it includes possessing the proceeds of criminal activity. This, of course, would cover the original criminal. He's possessing them. But it can be you, as an accountant, too. Now, and what if your client comes up to you with a whole load of money and says to you, puts it into your client bank account, and says to you, can you use it? You could well be treated as possessing this. But it also, more importantly, from an accountant's point of view, includes assisting another to retain the proceeds of criminal activity. So what if your client comes up to you with this whole load of money and says, can you buy a business for me? And you do. You may well be assisting in him retaining the proceeds of that criminal activity. So with your clients then, you must make sure your client is genuine. You must make inquiries into where he got the money from. And don't forget, anybody these days, in this country at least, who comes up with a whole pile of cash is immediately suspicious. It also includes, lastly, concealing the proceeds of criminal activity. So if you are attempting to help your client conceal it, both you and he are committing a criminal offence. So what's the punishment for the money laundering category? Well, unlimited fine, and you could go to prison for up to 14 years. So this is a very serious criminal offence. Well, that's the laundering offence. Moving on to the second one, the one that's called failing to report. This one only applies to professionals, such as accountants, in the regulated sector. Because if you know or suspect, or merely have reasonable grounds to know or suspect, that your client is engaged in money laundering, then you have a duty to report that to the authorities, to the Serious and Organised Crime Agency. And if you do not, well, possible 5 years in prison. And the third offence, the one that's generally called tipping off. So, should you let your client know that you're about to report him or that you suspect him of money laundering? No, you should not, because you mustn't make any disclosure which would prejudice an investigation. So what if you do? What if you do tell your client, you tip him off? Well, 5 years in prison. So we've clocked up a possible 24 years in prison that accountants could get if they get involved in money laundering. So you can see why ACCA think, good idea that members know not to do this. So that's our second matter in fraudulent behaviour, the topic of money laundering. Before we move on to the next recording, I would actually strongly advise you to try to write an answer to that sample question that's mentioned there. It's quite a good one to practice on.